Hello, welcome to Fininvest Nigeria. My name is Tom Princeville. I'm a certified investment and securities specialist, and I've been investing for the past 2 decades in the Nigerian stock market. In the course of this video, I would like to talk about the fundamental analysis of United Bank for Africa. I want to carry out a fundamental analysis of this particular bank. Is one of the big banks in the country, and in line with what I've been doing recently, I initially did that of GT and Zenith. This time around, I want to consider the analysis of UBA. So let us start with the company's revenue for the third quarter ended 2025 as well as 2024, because on the full year result, the full year audited result is not yet out. So we can still make do with what's available here to be able to determine whether you should include this particular stock in your portfolio or not. So the revenue actually for the third quarter 2024 is 2.398 trillion naira as against 2.469 trillion naira. 2.398 trillion naira as against 2.469 trillion naira, representing a percentage increase of 2.96%. 2.96%. So we move down to the company's operating profits. The operating profits here, the company generated an operating profit of 1.540 trillion naira as against 1.482 trillion naira. 1.540 trillion naira as against 1.482 trillion naira. This represents an increase of 3.77%, a percentage increase of 3.77. Then as for the profit before tax, the company realized 603.483 billion naira as against 578.597 billion naira. This is giving us a percentage decrease of 15.29%. 15.29% represents a drop or a decline in profit before tax. Now, we also want to x-ray the profits after tax. The company generated 518.046 billion naira as against 513.416 billion naira in the third quarter 2025. All right, this is representing 0.89% decline. 0.89% decline in profit after tax. Now, for the total comprehensive income of the bank had a total income of 1.634 trillion, 1.634 trillion as against 750.827 billion naira, giving us a percentage decrease of 54.03%. Now, we want to look at the most important figure in the analysis we've carried out so far. In fact, as it relates to the entire table, this is the most important figure. That's the earnings per share. This figure determines the dividends payout as well as the future growth or increase in the company's share price. So the earnings per share for The third quarter 2024 was 15 naira 15 kobo, 15 naira 15 kobo, as against 13 naira 56 kobo in the third quarter 2025. You could observe a decrease of about 10.5%, a decrease in earnings per share. All right. So the share price as at uh, as at 2024 was 32 naira 50 kobo. Then the current share price is 49 naira, giving us a percentage increase of 50.7%. 50.7%. And so to put it in perspective, had it been you invested, let's say, let's use a very simple figure we could very easily understand. Assuming you invested, let's say, 32.5 million in this company, all right, your money would now be 49 million naira, right? 32.5 million will give you what? Will give you 49 million naira. That's to put things in perspective. So we are through with this segment of the analysis of the company, and we want to consider the other section, which comprises the cash flow statement as well as the balance sheet. So we observe the share outstanding of the company here is 37.86 billion. The share outstanding is 37.86 billion. This particular figure is very important in the sense that if you reduce it by, let's say, half, all right, you end up increasing the earnings per share by half. You would increase it by 50% by merely reducing the number of shares outstanding. So the market capitalization is 2.17 billion. The company has a market capitalization of 2.17 trillion, 2.17 trillion, and then the equity representing the shareholder value and is essentially the difference between the company's total assets minus its total liabilities. That's given us 4.30 trillion. 4.30 trillion is the company's equity. This is telling us that the company has a solid fortress balance sheet. The balance sheet is very strong, considering the fact that it has accumulated this level of equity. Then for the equity per share, you simply divide the equity by the number of shares outstanding, and that will give you 113 naira 56 kobo. 113 naira 56 kobo. So this is the book value of the company, and this particular figure on its own doesn't really tell us much until when we compare it with the company share price of 46 or 49 naira. So 49 113 or 114 approximately minus 49. The difference is somewhat wide. So generally, when you do the subtraction, you subtract the company's equity per share from the company share price. If you have a larger figure, it shows you that the company is expensive. If the answer is a smaller figure, it's telling you that the company is relatively cheap. And if you can find a company selling at below its equity per share, that means the company is somewhat relatively cheap. Then for the cash balance here, the company has a cash equivalent, cash at hand, and cash in the bank of about 4.94 trillion naira. 4.94 trillion naira. So the company has a robust balance sheet. A robust a cash flow statement. The company is actually cash rich, and so we want to also take into consideration the bank's PE ratio. Just like with other banks, the PE ratio is quite small. Because for Access Bank we had 3.33 was the PE ratio. Then for United Capital, for UBA here, UBA has a P ratio of 3.16. And P ratio essentially is the division, the ratio between the price and the earnings of the company. We divide the share price, which is 49 naira, by its earnings, and the earning here is 13.56 or 13 naira 56 kobo. That will give you a P ratio of 3.16. So if you go by the basis of the PE ratio, the company is somewhat is cheap actually, but this is my major cause for concern. You could see a decline in the profit before tax as well as on the profit after tax figure. The decline is there, and more importantly, a decline also in the earnings per share. All right, and so this company actually, will it be a candidate for your portfolio? Is it worth considering for you as an investment for you, if you so wish? The matter is that the company is not all that it's not really like it's okay. It has the equity is here, the cash is here, and the revenue is also quite robust. But this is where the problem lies, the decrease in earning per share here. Generally, I prefer a company with an increase in earnings per share, because when there's that particular increase, it will certainly project itself in the company share price increasing as well. Because if this decrease persists, if it persists into subsequent quarters, it will certainly affect the overall share price along the line. Okay, so this is giving me a kind of cause for caution, actually. But the company generally is okay, it's good. If you really want to go into it, you can make it a tiny portion, maybe 5% or less of your portfolio. It's okay. All right. And so, please, if you are new into investing or you are an experienced investor and you want me to help you optimize your portfolio for better returns, all right, you could contact me on this number. Let's see how we can work together. All right, I've made so much mistake in my investment career when I started about 20 years ago. So I wouldn't want you to pass through what I passed through. All right, that's why I'm presenting this particular service, to help out with our new investors. So they will know how to lose money unnecessarily as they are starting off investing. So thank you very much for watching. Please subscribe to this channel, like this video, and as well share it members of your community.